Health insurance in Molalla, Oregon. The ability to obtain insurance is in a state of upheaval as politicians, doctors, and health insurance providers are pitted against each other, with the consumer laid bare on a gurney between them. This atmosphere requires that a consumer be educated concerning each different aspect of the current health insurance game in order to protect themselves against the possibility of being left without adequate coverage. This education begins with the three major versions of health insurance: PPOS, HMOS, and HDHPS. Preferred provider organizations provide more flexibility than the next major version of healthcare, HMOS, in that they tend to allow insured members to visit doctors outside of the preferred provider network. Healthcare providers outside of the PPO network are typically only allowable if a referral from a primary care physician is obtained first, although being in a point-of-service plan-style PPO will waive this need. Typical visits to out-of-network specialists or doctors is handled through a reimbursement process wherein a certain percentage, depending on the plan's coverage, is returned to the insured following receipt of payment. This reimbursement process can be difficult for members of PPOs and is considered by many to be the most significant drawback. Health maintenance organizations are considered by many to be the most well-known of insurance coverage plans, as most employers utilize them. HMOS differ from PPOS in that they are significantly less expensive where deductibles are concerned, and many of those covered are frequently not even required to pay deductibles for basic care. The choice of specialists and healthcare providers is limited in an HMO, however, and provider networks are often small. Many HMOs are easing up on the restriction as PPOS begin to obtain more market share, but a limited choice for healthcare when in an HMO remains the biggest concern. The high-deductible health plan has been begun to be implemented by more and more employers as an alternative to high-premium cost coverage. The aim of HDHP plans is to allow relatively healthy employees and their families to pay minimum monthly amounts while still being capable of obtaining emergency coverage if needed. HDHP plans require both the plan itself and a savings account that may perhaps or may perhaps not be facilitated by the employer providing the plan. The savings plans is a tax-free method of withholding money for the purposes of out-of-pocket expenses, and in many cases also has small contributions from employers. The most obvious downside to HDHP plans is the deductible cost, which can be prohibitive if a family member or employee falls chronically ill.